Oh, hello, please.
Yes, yes.
Hello.
Welcome to yet another Monday edition of the Office Hours. Today is June 12th, 2017, and wow, June's almost half over. Seems like it just started. So I want to thank everybody for showing up today. Take time out of your busy days to come listen to myself and Steve. Before we get rolling here, just a couple of quick things to take care of as far as the legal disclaimer goes. Just want to make sure that everyone here knows that we are a distributor of information. So everything we share with you here today is strictly for educational purposes. If you do need investment advice, please seek out a registered broker, registered investment advisor. They'll be happy to take care of you, give you all the advice you might need. All right, so one more thing to get through here, and for those of you who attend on the regulars, bear with me for just 1 second here. It's for the new people out there that may be joining for the first time. I want to make sure that everybody's aware, not only do we have award-winning technology, best scanner on the market, but we've also built a nice community around technology. And it kind of all starts with the trading room that has anywhere between 4, 5, sometimes 600 people in there on a daily basis, moderated by Barry Anderson, who's actually been on vacation for a little while, but he'll be back sometime this week, I think Thursday or so.
He'll be back in there Thursday.
His flock misses him, but fear not, flock, he shall return this week. So if you haven't been taking advantage of the trading room, do that. It's free. You don't even have to be a TI subscriber to get in there. So take advantage of that resource. Of course, today's office hours with myself and Steve. Then Steve takes the helm tomorrow. It's the trade of the week every Tuesday. I shotgun with him. Change it up a little bit and bring the CEO and the CTO, Dan muted, in. Always a good webinar. And then Andy rounds everything out with Thursday, and I write shotgun. Now, the thing you're seeing at the bottom here, ladies and gentlemen, the Friday support session. This is relatively new. It's been going on for the past 2 Fridays and will continue to go on in perpetuity every Friday from 11 to 2 p.m. Eastern, 8 to 11 Pacific Standard Time. And it's really more or less what we affectionately call the Friday free-for-all, because whatever it is TI related that you want to get your question answered or just observe and learn, come one, come all. It's free and it lasts those 3 hours. Once again, 11 to 2 Eastern Standard Time. So those are all the fun things that we have going on during the week, so please take advantage. Well, Steve, before we get into the good stuff, how was your weekend?
It was really nice because I didn't have to be anywhere. The weekend before, I had to drive my daughter to LAX. You know, that was 6 hours round trip for a weekend. You know, there was always something going on. This was a weekend where you just woke up and didn't have to be anywhere. It was really nice. So a good weekend was had by just relaxing and not having a big docket, not too much honey-do list items. How about you?
Good deal. Yeah, well, we've talked about my weekend already, so I'm going to save everybody the description.
Oh yeah, that's right.
Yeah. In any case, could have been worse. So
real quick, hey, just real quick, Bill Scott's asking, is there Friday support in the live chat? The live trading room with Barry is always going to be his room, focused on trading and live trading and everything they've always done. But Bill, for the last 2 Fridays from 11 a.m. Eastern to 2 p.m. Eastern, that's a 3-hour block, we basically sent out an email just like another webinar would be, just like this would be. And you show up in this type of format here and you ask your questions in this type of format. And we go over scans or problems or how to fix something or maybe how to configure something or any questions that first come, first served public has. We've made ourselves available on Fridays, and it's the second Friday we've done it, and we've second Friday was bigger attended than the first Friday, and both Fridays we got a lot of great feedback, people thanking us for being available because they had a few questions that they just didn't want to wait for till Monday. So come one, come all. Basically, if you're on the webinar mailing list, more than likely you should just keep an eye out for the Friday technical support forum and you'll be invited. All
Yep,
right.
just like the regular webinars in the same format exactly.
Yeah, Bill, if you didn't get an invite, maybe we'll start from scratch and go to info@trade-ideas.com and request that the email you want, get set up, and we'll see if we can get you going that way. But it's a great 3 hours for people to just have an impromptu gathering and go over some stuff.
Absolutely. And, coincidentally, I'm going to pass the baton to you in just a second, Steve, and let you do your market recap. And, of course, in the past, it's like, oh, well, here we are in the range. Of course, things have changed, right? And ironically enough, Steve and Andy and myself were in the Friday webinar when all the excitement started to happen. So let me pass this over to you, Steve.
Sure. And while you're doing that, Nathan, on the chat room, on the live trading room, as we like to call it, I don't have any way to try and help troubleshoot your technical support sound issue. However, there is, there is webinato.com. They have a technical support page, and for something simple like you, in other words, not simple, but for your problem of not getting audio to come through, they may be able to give you the technical support help that we can't. But I'm sorry, I can't help you on that one. So, yes, Jamie is right. A lot has happened here in the last couple of days, and it's not so much evident on the spiders. What we're going to start with the spiders, SPY, SP500, ETF. This trend line is still very, very much in play, touching 1, 2, 3, 4, 5, or 6 or so times as we come up here, going back. And then these horizontal levels are indicative of breakout levels, which of course, can return back to the scene of the crime to become support levels. I think I even mentioned the last week, this particular little void right here was still open with these 2 green bars. I said, don't be surprised if the morning sellers maybe try and drive down and close that gap and at the same time tag that prior resistance level becoming current support. And it did, and that was a beautiful close. Then our markets moved higher for whatever reasons. And then we kind of hit Dojiville. Doji is, these spinning little tops here where there's not much of a red or a green candle body. And narrow range dojis typically mean, it's a day of rest. There really was no winner or no loser that day. And then for the next few days that went on here, we kind of did the same thing. Gap down, open, trade back and forth, and then close where we opened. Gap up, trade back and forth, close where we opened. Here's a perfect day right here, opening right on that line, back and forth, and then a giant doji day on Friday. Well, what happened on Friday? Friday was very interesting. We were in the middle towards the end of our technical support seminar, so we weren't focusing too much on market action. But what was happening is, I believe Goldman came out midday after they were probably duly positioned short and had their high net worth A-plus clients short, and said, we feel that the technology valuations are just a bit too rich. The multiples are too rich. And that didn't take long to just set off an unbelievable firestorm of selling in the queues. Now, what was very unusual about today is that a lot of times when we have this kind of a candle, we can go around the horn and look at the spiders, diamonds. Hey, what's going on there? They're still going up. And the Russell 2000, geez, that was breaking out on Friday as the Qs were plummeting to the center of the earth. And so it was a very interesting demonstration of what we would call rotation. So it was not a broad-based sell-off. Essentially, it was just one particular sector was getting ahead of itself, leaning out on the branch too far, and all it took was some comments from Goldman Sachs to snap that branch. And as you can see, elevator down, where it takes 12 days take the staircase up, can be erased in a matter of hours on the elevator down. The green line I actually drew while we were broadcasting on Friday. I said I wouldn't be surprised as the prices was trading up here. We had already filled this gap, and I said, God, there's another gap down here, and wouldn't you know it, it was also a breakout. Well, sure enough, after we signed off, the selling continued. We busted through that level. The price level triggered, as you could see by the green level turning, because the price alert was used to identify that level. But then the close, curiously, as they ran the stops, bounced and buoyantly kind of just stopped right here, right where that gap fill was, and that's how we went into the weekend. And so I'd like to first say, no matter what you were looking at, let's take a look at a few stocks here. NVIDIA on Friday, the daily chart, giant outside day. Apple, horrible day. Tesla, giant outside day. A lot of tech stocks just falling out of bed. Those are not the days where you want to jump in and say, oh, okay, that was a pretty good bounce at that certain level. I'm going to go ahead and jump in here. No, my point is, what I'm saying is the technology stocks broke on Friday, and a lot of them today was the beginning of their recovery. So Jamie's going to talk a little bit later in the webinar how we're going to use some Trade Ideas technology to maybe identify a short watch list of some stocks that may have gotten oversold on that bounce. But what is very interesting here was the rotation. It went basically from tech into financials. It's a daily chart of the XLF. So as tech was falling out of bed completely, I've never seen a whiplash rotation so quickly and so easily defined as out of tech into financials. And that's basically what happened on Friday. And so the good news is that the rest of the S&P 500 and the Dow did not sell off with the same red hot poker candles. They seem to accept money rotation into them going forward. So what we've got on Friday is nothing more than a technology breakdown or maybe a rebalancing or a pullback. And so what we're going to start to do is maybe look for a couple days more of trading where some of these tech stocks that have been in favor can start to maybe show themselves. Well, Apple, for instance, Apple took out Friday's lows and went even lower on big volume, but Apple built one of those really nice washout bounce candles, filled this gap back here, which needed to be filled. So maybe we'll start doing some simple things like setting price alerts on that one. We can call this, dead cat bounce maybe. But it's still a bit early. 2 days really isn't enough to start really looking for new setups. We're going to need 3 or 4 days, I think, of some stuff that's going to start setting up and showing that the bases have been filled. And what's interesting to note is look at some of this volume. I mean, Apple, the volume bar today was bigger than the volume bar on Friday. The Qs did 4.58 relative volume today. Very interesting. 4.5 times normal volume for the Qs. They still had a lot of issues to work out. They were definitely on the couch with their therapist trying to work out issues. Whereas the SPY didn't, lowly old 1.5, kind of a normal day plus a little in the spiders. The diamonds 1.79, a little bit more than normal, nothing special to write home about. The IWM 1.42, but the Qs, that's where the damage was done. So point being is don't try to be a hero and jump in here and look for re-entry points after 2 days of huge volatility and huge volume. Some of these stocks followed through, like Apple. Apple followed through. Amazon decided not to follow through, not to make a new low. So they're all kind of on their own right now, trying to create their own level of possible support. Interesting, Tesla went a little bit lower but bounced back today, so Tesla's starting to show some strength. And before I turn it back to Jamie, I just noticed one thing, W, which was a very interesting call. This is a short squeeze at all-time highs. As you can see, it's an all-time high here. The shorts are still at 45% or so. Look how they reacted. Here on Friday, they got a little bit caught up in the craziness, and then today they washed out, cleared out that gap, came down right there to that level of support, and then put in a nice washout bounce. And as you can see, I have a working price alert right there, that red line roughly at 70.99. So I kind of like this trade. I'll just leave you with the thought that a high of 71 tomorrow, if it starts to hold a bid and move higher, that Wayfair short squeeze to all-time highs could be back on its way. That was a pretty quick reversal, and it's not a tech stock. It's a online retail stock for the most part. So
I'm wondering what those guys are thinking.
Which guys? The short guys by being stubborn and not getting out?
Yeah, they're like, oh, well, I'll use 75 as my stop loss. Or some other random number, but I just don't understand how people are short into that pattern, it's just mind-boggling.
Yeah, let me shortly address Nathan's question because there's a couple ideas going on here. He says, I'm not able to create a price alert. I thought it was available to all TI customers. We've talked about that. It's currently available in unlimited usage for the premium users. However, in the newer versions coming out in the next week or two, I believe, or the next beta versions, we're going to start allowing all users to sample, I think, 10 or so price alerts to get a feel for how to use them. Otherwise, you got to upgrade to premium. But as I mentioned, a lot of people, their brokers are going to have some sort of a price alert. So, I mean, I don't like you to go outside of Trade Ideas bitchin' technology, but if you have to use your Thinkorswim or your Interactive Brokers price alerts or your Schwab alerts, you can use those price alerts just alike. I just wanted to show you a really nice bottoming wick that bounced right back up, and if it continues to move higher, giant short squeeze, 45%. These people that are remaining short as it goes to all-time highs, if it goes to all-time highs again, their pain is our opportunity. So I'll just leave you with that. And that's what's going on. It was all about tech breaking down. Everything else seems to be kind of okay, but give some of these tech stocks a few days to base out and start to reform and reset up. All right? All right.
Good stuff, Steve. Certainly off the beaten path of Doji land.
Back to Jamie. Yep. Yep. And, you know, dojis are kind of a, I hate to say it, but you know, June is slowing down, July is going to slow down. The summer months can breed a lot of dojis back and forth. I recalled that many, many years looking back, seeing doji after doji, day after day, and reminding myself, well, it is summertime, so that seems to be the norm. You know, so keep an eye out for that.
That's what made Friday even stranger than normal, because it's a Friday in June, right? Which, you know, if it were 7, 8, 9, 10 years ago, you never would have thought anything like that would have happened in June on a Friday. But
yeah,
the past few summers have not been like traditional summers, and it seems like that's intensifying now.
I've just never seen one particular asset class, and again, we've talked about the big five that make up the NASDAQ, you know, your Amazon, Google, Apple, Netflix, Facebook, Microsoft, and whichever else ones. I've never seen that little basket do such a violent turn when the rest of the market just says, oh, that's kind of interesting, look at that. Usually we have kind of a broad-based sell-off as there's a, you know, broad-based news or a macro news event where the whole market gets skittish and you start to get selling across the board. But I've never seen that vicious in volume and volatile selling in just one sector, one index, I should say, before. It was very new.
Right. And see, everybody's been wondering, okay, since we're so heavily weighted in the Qs on the five, you know, henchmen, the big tech stocks, this was the first little taste of what happens when a little bit of selling comes into those guys.
Music stops, yes.
It kind of seems like a big oversight from a regulatory basis, but what are you going to do?
Well, I think the powers that be want the 401ks and the index funds to keep going higher until we can figure this out.
That's probably correct. Okay, moving right along here. Holly, you know, we talk about this all the time, so let's just pretend for a moment that we're all fishing boat captains, okay, and we're usually just sailing along the sea of Qs or spies or whatever other indexes we like to sail upon to try to catch our fish. So the perfect storm kind of unfolded on Friday, and I guess probably everybody pretty much is familiar with that movie that little Marky Wahlberg came out with a few years back, where based on a true story, these guys go out and get caught in a big storm, and, well, I don't have to go into too much. Let's just say it doesn't end too well, right? Now, as captains of our own fishing boat going out onto the seas of data every day, what are we hoping for? We want calm seas, and we want to catch fish, right? So you're going to hear a lot of different opinions about a market that is kind of shaking out like this one is in the past couple of days. You're going to have some people say, opportunity abounds. And then you're going to have some other people say, it's too risky, right? And of course, I have to err on the side of practicality. In other words, where should you be when there's a huge storm out there? If you're a fishing boat captain, you'll probably want to be in port, nice and cozy, right? Waiting for the storm to pass. There's no urgency. As soon as the storm passes, we'll go back out on the smooth water because that's what we like to operate in and catch our fish and do our trades, right? So see Holly, she's that crazy captain that doesn't care that the storm's coming. She took her boat out anyway today, and of course, look at what happened. You know, look at, this is the risk on P&L graph. This is risk off today. So when we see Holly performing like this, of course, everybody didn't know what to expect today, but we kind of had an inkling that, well, I don't really know what's going to happen, so I better be a little on the cautious side, keep my powder dry. I'm not just going to be, you know, lurching at anything that looks semi-good on the chart. And of course, by observing Holly, we can see that she could never find any traction. Risk on, risk off was just a little bit of green, and then whoosh. I mean, it never even seesawed back and forth. So once again, when you see the statistical model putting out a performance like this, even on risk on, where we get green and then just can't hold it, and it's just back and forth on this red-green seesaw, but most of the time spent in the downward area. Of course, this area here is where things started recuperating a little bit, and we could look at this just like a chart. If we were able to draw a line straight across, had a couple of attempts and a pullback, and then still the ride up was anything but pleasant. Lots of big pullbacks there. So Holly was acting as her capacity, the canary in the coal mine today, telling you, well, I'm not saying don't trade, but statistical probability is not working out too good today. And then, of course, from a common sense perspective, just knowing what happened Friday and knowing what we were coming into today, you know, most people are going to err on the side of caution. Now, Holly did manage to kick out quite a few trades today. And an interesting thing to point out here is the number of strategies that she showed up with here today. 11, which isn't the biggest compliment. We've seen her with 14 and 15 before. But just from our general observations, especially coming off a day like Friday, typically the larger the stack, it seems that things typically don't turn out so well. Maybe that means something, maybe it doesn't, but we did have a nice stack of 11 strategies today. And when it was all said and done, 16 trades, and all but two of those guys were shorts today. Now, as you can already gather from watching Holly today or just looking at the P&L graphs, whether it's risk on or risk off, a lot of noise today. All right, so while she did kick out 16 trades, not a whole lot to talk about, not a lot of standouts. Now, G-log, this little guy right here. I mean, you can't ask for, well, you can, and you can get maybe a little bit better entry, but this is pretty much a classic. When you see Holly call the long right here, nice big blue line indicating the buy price, the entry candle here. Of course, when I see this, sometimes it's a little bit before what we see right here. Sometimes, in this case, it's a little bit after, but it's very close proximity. I'll draw a line straight across here and kind of snuggle it up. These highs right here. We had a nice little consolidation in the first 5, 10, 15, 30, 40 minutes or so. Then we get the range break. Then in the next 5-minute candle, Holly's like, you know what? This thing's got some good statistical probability coming from Nickelback today. Not quite 60% statistical probability.
And don't forget the daily.
Yes, yes.
I know you're going to. I'm sorry.
Surprise. See, Steve, you can't see it yet.
Mm-hmm.
But when I click over here, whoosh, well, of course, a little ahead of the game here, but nice intraday pattern coupled with statistical probability from Miss Holly. So first and foremost, 59.8% chance, not too shabby. Couple that with the penetration of the range break here, 5 minutes after that occurred. For someone like me who really likes playing range breaks, that's what I like to call a two-star trade. Statistical probability backed with a nice range break here. And of course, Holly's always going to identify your risk tolerance. Now, we get some nice movement immediately, and then look what happens. Start doing this again, a little sideways movement, and then once again, a range break with higher movement. Now, when we're in the trade, and whether we're up a nickel, a dime, could be any other Holly trade, we need to temper our expectations, because we all know, for those of you who watch Holly on the regulars, we all know that Holly is not so good when it comes to getting out of the trade. And we can see here, right here, under exit reason, profit save functionality. Things got a little wicky, a little volatile. Holly doesn't want to let her 8 cents turn into a negative number, so she books out right here. Now, of course, really no reason for us to get out, especially when we're seeing this. And then, to get an idea of what might be in this trade, let's take a peek at the daily over here. And we can see not only, and that's what another really cool thing I'd like to point out is this bar is breaking above these pivot lines that I've drawn. Even if we go to the tops of the wicks as well and create a third one, it just motored right through those and is into open space here. So then we're looking over here to figure out, okay, well, this might be the next stop for go log. And of course, we could even get more detailed and add another one in there. But when we start to see the same pattern here, this is a break from the range on the daily. Just like you're seeing a break from the range here and a break from the range here. That's the beautiful thing about this little pattern, guys and girls. It's fractal. It can occur on any time frame. So a lot of times, whether it's a Holly trade or maybe something completely different from a top list or an alert window, when you make a good intraday signal in order to temper your expectations and know when to get out in a timely fashion, we just look to the left to see if it's going to bump its head on anything anytime soon. All right, Steve, looks like you're doing a great job keeping up with the questions. So,
hey, just before you go, there was one trade on BLDR. Not exactly a great.
We're getting to that one. Here we go.
Okay, I was just trying to help you segue. Daily chart, please.
Yes.
Hello, please. Okay, so look at that daily chart. Interesting little pattern, little flag pattern starting to develop here. So my point is, Holly took a trade, out of the trade, made a few cents, missed a few cents. I can't even really tell. I didn't pay too much attention at the time. But going back, I'm checking all of these trades and I'm looking at the daily charts. And I would have not have seen this had Holly not really brought it to my attention today, maybe a day early. But what I'm seeing is on that daily chart, those three little wicks there are showing me some real near-term supply, some near-term resistance. Perfect place, in my opinion, to put up a price alert there, pretty much where that orange line is. I've done so in my charts, and you guys may want to as well. But the reason I bring this up is never would have known this BLDR setup unless I had flipped through the Holly trades. So I'm not really trying to focus on where the trade was called or where it wasn't called. This is an example of a few things that can happen a few times a day. I'll flip through all these trades and see something that I normally may not have seen but looks really interesting on the daily chart, and I'll go ahead and mark that up for a future possible price alert. And I say thank you, Holly, for showing me that one.
Absolutely. Just using Holly, even though the trade, what do we make on the BLDR today? A whopping 6 cents. Even if you stayed in it all day, 9 cents. But that is very attractive. Buyers and sellers are starting to equalize, and a pop above there could yield another good upside move. And Holly's just another high-quality information source. The only reason we're aware of that daily is because Holly brought it to our attention. Which brings up another good point. A lot of the times on the intraday, sometimes things, nice pick off the bottom on that wick there, nestling up to the buy price. But sometimes on other Holly trades, things will go immediately. And then sometimes they'll go up, come back down and retrace, and they'll hug this line a bit and then make another run through it. And then sometimes that's when the big push happens, either to the up or the downside, depending on if it's short or long. But just keep that in mind. Statistical probability is good for the day on these plays. but sometimes it'll hover and, you know, take 2 or 3 instances passing to and from, or, you know, back and forth through the line before it goes. And other times, like the G log, it's just off to the races. But when you see this, see Holly make the play, and then we see a nice consolidation, and you can identify another potential range break. Obviously, if we can identify the buyer earlier in the day, then there are opportunities to add to that position. This would have been the perfect example. We take a little bit originally with Holly because we like what we see on the statistical probability and the range break. Then we get the second opportunity to add a little bit here as it range breaks again and continues higher. So that's pretty much the Holly highlights today. A good amount of trades, but after everything was said and done, not a huge risk, or excuse me, a huge P&L on the risk on. And then in the more conservative mode today, Holly, you know, is down about $1 on that assortment of trades, which in light of recent market events, only to be expected, because you may or may not have noticed that when we were in doji land, after about 1 or 2 days of doji, the Holly plays were just nice and calm, and they, you know, once she has a little bit of data to work with, then things are more predictable. Statistical probability has
doji land, I just realized.
Has a better chance of working out, you know. But when you throw in our friends from the queues, kind of, you know, doing things like we see here, it's going to take a couple of days to get a couple of days of getting new market data under the belt from Friday's session, today's session, maybe even tomorrow's session, before we see things smooth out. And I just want to take the opportunity here to show this screenshot as well, because I was thinking the same thing, and then here's Dan Shapiro, which is a good friend of the company and owns his own trading outfit and educational services as well. But these were his comments. And, you know, this guy's been in the market a long time as well, so when I see something like this, I'm like, okay, we're of like minds. Because even though the market shows crazy bars and people are like, well, there's opportunity all over the place. Yeah, there's also a lot more uncertainty all over the place as well. So, you know, a lot of the times, people can let their egos get the best of them in market conditions like this, when from a very practical standpoint, which, you know, practicality and the ego, they don't really get along that well. So, you know, when you go more to the tune of, yeah, I'd rather go out on calm seas, or when there's at least 3 or 4 foot waves if you're surfing, you know, as opposed to the 1 foot waves, or in this case, going out into the sea with 20-foot rogue waves lapping at your boat, it just doesn't make a whole lot of sense. The practical way is to let things calm down, and then we get back on track. You know, this storm will pass just like all the others.
Hey, can we do a quick technical demonstration? Somebody wants to know how you did make that annotation doji land on a chart, and more importantly, how to take the crosshairs off, which is the real hack, to be able to manipulate it. If you have your crosshairs on like I do all the time, I love my crosshairs. For now, at least this version, we have to turn the crosshairs off in properties, uncheck it.
Mm-hmm.
Then you have access to really grab it, manipulate it, move it around.
Right.
But to create it, it was nothing more than a right click and annotate, I think it is, markup.
Right.
There it
come
is.
up here and say text annotation, and then we can just type in our text, hit the button, we can drag it around.
Yep, as long as your crosshairs are off, you can drag it around.
Now, maybe you want to change the color of the text. Once again, we go the markup, and then we say annotation color. For some reason, it's not active. There.
There it is.
If I want to change, just click here.
Yes. That's horrible.
Yes, it is. Now,
contrast, Jamie.
If we want to get rid of this, we just click here. And hit the delete key. It disappears.
Nathan, we're having some simple moving averages coming in, but it's not going to be a chart lover's dream for people who want to look at every single line, Ichimoku Cloud, VWAPs. It's going to be very simple, probably moving averages, and that'll be the first as far as Bollinger Bands and other things. I mean, we really just, if people want to look at that stuff, we remind them that the power of our service is in the real-time data and the configuration of the data, and of course, the AI of the data. The charts, we're doing our best to try and create some unique shading there, the red and the green, risk-reward type stuff. But when it comes to indicators, if you're looking for pretty much a drop-down menu where you can see every indicator possible, we're not going to have that. We're going to have just a few basic indicators, primarily moving averages coming up next.
Right.
Exactly. Use your broker.
I just double-clicked on one of my top lists to pull up this Yelp symbol. And I don't think you can see it real good yet. I see my smart stop there. Let's look at the daily. Okay. So we're looking at the daily now on Yelp. And notice I've got these gray boxes over here. As soon as I pull up any symbol by clicking from a TI window, in future versions, you're going to automatically have your smart stop show up right. You know, you can see it right there, smart stop and a profit target for anything that you pull up. Of course, this is not available in the beta just yet, but it's probably a few versions away. But just wanted to give you guys a peek. It's a little bit more visible on the daily. For some reason, it's a little bit more truncated on my intraday. But that is coming. And then, you know, imagine if when you pulled the stock up from any TI window, not only did you have a profit target and a smart stop already on your chart, but you also had the short-term support and resistance lines populate as well. That's coming too. So, you know, kind of getting back around to Nathan's comment about the charting. Once again, if we look at this G-log move today, well, notice it happened without any indicators on here, right? Now we could go putting moving averages, Ichimoku clouds, Bollinger Bands, Fibonacci's, and you would notice correlations. But just keep in mind, this happened without any of that stuff there. So that's what we're trying to do, is keep our charts not so cluttered up with all the other same old stuff that everybody else has, but trying to put a new and different spin on the data, along with incorporating some of the simple moving averages that Steve was alluding to earlier.
Yeah, and we actually did just increase the space on the daily chart and the intraday chart from the right candle all the way over to the x-axis, or the other axis, whichever one that is. So we did already increase that space. It was tighter before, but it's been opened up a little bit. But I just want to make sure that everybody does understand the control button and the mouse wheel. If you're not aware that you can zoom in and zoom out using the control key and the mouse wheel, it really does help, you know, try and alleviate a lot of things that you do want to see. Hopefully the blue shaded area, I believe, may be a fix coming to make those volume bars more contrasting, which I understand. So the priority right now is, in the development department, is working on these charts and getting these up to the next level.
And yes, Cameron, this is being recorded, so you can always go back and watch it later. All right, so let me take a look at my notes here. Where did I stop? Okay, so only 2 trades from Holly worth kind of going over today, the G-Log and the Builder. But 2 things that we want, or one of these guys we want to keep our eyes on moving forward, which is the Builder. So let's go ahead and do this. I'm going to get my, I've already put in, let's see, that one never hit, so I'm going to delete that one. This is when we were trying to pick a bottom from the queues on Friday, Steve. I'm going to go ahead and get rid of that one. All right, so I've already got the BLDR in there. And by the way, I'll just drop the cloud link for these price alerts into the chat window, so that those of you with premium access, just drop it in there. You know the drill. All right, so we've got, let's just check our chart one more time. Okay, we got the little, as Steve likes to call it, the Bart Simpson haircut pattern popping up here. So we got that one dialed in correctly. Now, a couple of other plays. The trend change lubricant has kind of been out of vogue, anyway, in my world as of late. But man, after the past couple of days of market activity, we've got a full list to look through. Now, I've already taken the liberty of scanning through most of these, and I don't just want to put a bunch of mediocre ones up there. So Steve's pretty much in agreement as well that UAA the Under Armour is worth keeping on the radar moving forward. What did we talk about? A pullback on this one, Steve?
Yes, exactly to that line that you've got. Mm-hmm.
So we're looking at 22.14. I'm just going to round it up to 15.
I mean, and maybe it takes 2 or 3 or 4 days and you forget about it, but just like I was showing you guys in the spiders and the indexes, stocks do the same thing. They break out of resistance levels and then come back and tag them, and then they become a support level, and then that becomes basically the definition of what a pivot level is. So rather than being the guy chasing the train too late out of the station, let's just see if we can get a 2.0 type setup, whether it takes another 2 or 3 days. Better to be wrong and not late. Kind of even I'm trying to say there.
I think it's missed money is better than lost money.
Yeah, better to avoid chasing a train and losing money than to not have lost any money at all and just being patient. Something along those lines.
I think love comes in there somewhere. No, okay. So we've got from above, and then we've got, yes, okay. So that is a pullback, UAA. Also, the added little bonus if it does catch, 26.27% short float. All right, and I believe the other one, this guy right here, Stone Energy, which we can see on the long term, very beaten down, kind of finding its base down here, and then here we are butting right up to that little line here, and then we've just got a couple of different little small levels there that we could tempt or get a piece of if we get into those candles. So I just say anything above today's high, Steve?
I'm looking.
So 25
Yeah,
cents.
it may pull back a little bit and then make another reassessment of that level. It's still such a tight range, very different from the last chart.
Yep. Go long. Daily. True change. And the short float on this little guy is still 42.05%.
What's nice about that one is the long, narrow range. It's really, the longer, the tighter the range, the better, the more significant and the more strength you'd like to think it's got behind it.
Yep. Okay, so just going to leave you guys with these three today. Not overloading, but just 3 more guys to keep an eye on for tomorrow and moving forward. As Steve said, it might take a few days for some of these to trigger, if they ever do. So real quick here, kind of pop this into the chat area. All right, so that cloud link is in there. And let me just check my time here. All right, we're still looking good on time. So Steve and I were talking before the webinar began, and we were looking at the Qs, of course, as many people are obsessing over right now. And we were just kind of looking here, after the first day, I think we had what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13-day cover-up. And then today we added another, what is it now, a total of about 14, 15 days that got engulfed in this area here. So looking at what the Qs did, there's a lot of stocks out there that are mimicking what the Qs are doing. So let me pull my thing over here. All right, so I just took one of my favorite top lists. Of course, you can do this with any top list that you have. All I did is I came into configure, went to my ever so handy search tab, and looked for the position in 20-day range filter. So once we find this guy, I simply clicked here and I said show the column. Don't want to put any mins or maxes in there, just want to show the column so that tomorrow, assuming that we do get some traction to the upside, right? Assuming that we get some traction to the upside, we might go sideways, we might grind up, who knows? But as long as we're looking green on the overall markets, and it looks like these guys are trying to recover, then we can find stocks that are mimicking the pattern. So for example, I believe, all right, everybody take a gander here. Now let's look at MKSI. Oh, okay. Well, I can see it's fallen down. It even surpassed this little area here. as they frequently do. Went down there and tickled it and then shot back up. All right, well, if we start looking at a lot of these guys, some of them are going to be slightly, well, this little guy's at the bottom, not quite at the bottom. Some of them are going to be prettier than others, I should say. That one little guy's not exactly mimicking, but BBN, another one. Magically enough, if we start looking to the left, we'll notice different chart patterns, but correlations here. So if we do start to catch traction tomorrow, you'll notice that these guys are, the whole cylinder is filled up. That means it's significantly below its 20-day range. So the snapback could be imminent in order to catch things that look similar to what we're seeing here. And all you have to do is add the column and pay attention to the full bars. Some may look like they're butting up and be easily identifiable, just like any chart. Some are prettier than others. But I think that you get the overall gist here. Steve, any twist you want to put on here? Any other observations?
No. Again, I think it's man versus man and machine together, using the machine to find the overbought data, and then using our eyeballs to find levels of interest that we can maybe set price alerts at, or maybe even take it one step further. Put up Snap for a second. I'm just going to make a point. You know, a lot of these charts, they have areas where it's almost like a foregone conclusion. Snap just had to go down and test that low from that day right there, made it by 3 cents and popped back up. Well, you may see a lot of charts that have that obvious level that it's just been so beat up in the last 20 days. Why not? It's a foregone conclusion. Go down and test that level. Well, those would be the kind of levels you might start marking up, like I was saying, which could be an obvious gap fill or an obvious new low test, and then see how the price behaves at those levels. That's one possible thing to do with this alert. The second possible thing you could do with this alert is to just tap on it again, forget the chart at the moment, and make note of all of those symbols inside there at the top that are at the full blood red squares. Create a symbol list, call that oversold, maybe even put the date in there, and then, you know, all you got to do is maybe create a brand new alert that uses that symbol list of those stocks in oversold symbol list, and maybe use the new high, new 30-minute high, new 15-minute high, and start monitoring those things and see if they're going to start turning around and finding bidders. So, you know, it's a multi-layered approach to use the technology within the confines of our system. And sometimes we've got be a little bit creative. Take, you know, bucket A and take the skim the top of bucket A there and move that over into a symbol list, and then keep an eye on those stocks for the next 5 or 6 days using some sort of simple custom alert. Like I said, new 15-minute high, new 30-minute high, nothing more, nothing less. So just trying to give you guys ideas as to how to use the data to create some possible scenarios. Chance favors the prepared mind, and if we can, you know, create some setups, whether we're using price alerts or using all of those oversold symbols and dropping them into a symbol list, you know, these are the ways in which we can try and be one step ahead of the market, and in the same time simplify our process and not chase our tail at everything coming at us at once.
Absolutely. And what I did just now is I highlighted this whole column. So what you can do to capture all these symbols is I hit Control-C on my keyboard. Now I just pasted all of those symbols into the chat area. So there's your watch list for tomorrow. If we do get some green side traction, then you probably want to put these into a custom list and attach them to your favorite alert window, whether it's a new high or whatever. But just keep that in mind. If we get some traction to the upside tomorrow, these are some things that you definitely want to pull up and see if you can identify that good entry.
Did you drop Mr. Volume Radar in the chat window earlier or yet?
I did not. I dropped the price alerts in.
Okay. Let's go ahead and drop that in. Somebody was asking if the Volume Radar is in the cloud. Jamie's basically going to do that for you now. Just create that basic cloud link and drop it into the chat window. If anybody misses it, or if somebody on the replay, you know, catches this and wants it, info@trade-ideas.com. Request it, and we'll, you know, try and get a copy out to you as well.
Right. I just took the symbol count down. I had it on 1,000, so I shrunk it down to 500. So just keep that in mind when these top lists refresh every 30 seconds. If you notice any bogging down, then you can always come in here, right-click, and go to time frame, set record count, and you can reduce the number of stocks if it's bogging your system down. So just keep that in mind.
Max is normally 1,000, but you probably wouldn't use that.
Yeah, even if you have a real beefy machine, it'll still bog you down pretty good when a 1,000 list or 1,000 symbol list refreshes. All right.
All right. I think we did it.
Hey, time flies, Steve. We got 5 minutes. So anything to add before you bring Scott in?
Just, let those tech stocks settle a little bit. There might be some great opportunities in certain ones that are bouncing. But just, be aware that that was a singular event on the tech side only. Somebody asked me earlier about the trade of the week in X. I'll certainly go over that more tomorrow as we get some more data. Would have been nice to see the follow through today. You can see a wonderful saucer bottom going on there. That's actually was also found on the trend change lubricant on Friday. It triggered today, but pulled back, but it's right within the confines of our acceptable risk-reward ratio there. So it's going to require a little bit of patience, but we'll see. I was hoping there might be some more sector rotation into some of the names that were showing up on that trend change lubricant, but it's still too early to tell to see if that'll be the case. But U.S. Steel, the trade of the week, the stage is set. Trying to risk a couple bucks to make $4 or $5. So it's a swing trade. It's a position trade. Would love to have seen it follow through today, but most of the trades of the weeks and the position trades do require patience, and patience is a virtue when it comes to longer time frames.
Yeah, I was just curious to see if there was one sector that was dominating the trend changes right now. Looks like real estate and manufacturing pretty much.
Mm-hmm. Yeah, and financials on Friday, and then a little bit of infrastructure and manufacturing. So we'll see. It's just one day out of many. That's the beautiful thing. If you go back to the email, the chart is marked up where your risk zone is and where your reward zone is. The reward zone is basically the filling of that gap up there.
Yep.
And the risk is just a couple bucks below, I think at 19.75. I'll have to go double check. All right, that's all for me.
All right, thank you very much, Steve. All right, Scott, if you're waiting in the wings, everybody's ready.
Unmuted.
Save money.
Yeah, thanks. So thank you for the presentation. We want to remind everyone we have a podcast that comes out every Friday. New fresh one was up this last Friday with Jamie right here and Dan Merkin. So feel free to check that out. Just subscribe to the Trade Ideas Podcast by searching for Trade Ideas Podcast in your favorite podcast app. Pretty easy to do. Find it, add it, and then you can also download our archive. We've got some really good back issues going on, and there's going to be a new one up this Friday, so keep tuned. We have a version of Trade Ideas for those of you that have Interactive Brokerage accounts and want to connect your Trade Ideas account directly to Interactive Brokerage and trade directly from Trade Ideas through IB. So you just need to get the new Trade Ideas beta. Anything newer than 4.0.122 is going to have the Brokerage Plus integration built in. So grab 4.0.136 from TradeIdeas.com/beta and connect your IB account. Any questions about how to do it, there's a video on YouTube, so just search for Brokerage Plus or Interactive Brokerage on our YouTube channel, or email info@trade-ideas.com for help setting that up. More brokers are going to be coming soon. And we have a discount code for you. It's GRAIL is the magic word, all caps, GRAIL. And that takes 15% off your first month or year of Trade Ideas, including standard. And both standard and premium come with a full hour of one-on-one training with Jamie or Steve or Andy. So after you become a Trade Ideas subscriber, watch some of the help videos and attend the trading room in our webinars. And after a short period of time, you're going to have some questions to go over during that training period. So then book your training. Go to support, click on training, and pick the best time and date that's available for you, and we'll spend a full hour with you getting you going. So we do recommend that you learn a little bit about trade ideas and try using it before you schedule the session so that you can get the most out of your session, but it is an amazingly helpful thing to get the most out of trade ideas in a short period of time. So any questions, email us info@trade-ideas.com. You can follow Jamie on Twitter @QuantBot, follow Steve @TodayTrader, our CEO Dan Merkin's Trade Ideas 1. We've also got some other handles out there just like @TradeIdeas and a few more. Facebook.com/TradeIdeasPro is where to find us on Facebook. When you like us there, you'll get some different content we don't post elsewhere, so that's one of the reasons we tell people to follow us on Facebook, and also that way you can share it with your friends. Email Jamie, jhodge or Steve is Steve but the best email for support is info@trade-ideas.com, so please submit your questions there. Thanks, Jamie and Steve.
All right, thank you.
Yeah, we'll
Thanks,
have recording.
everybody. Thank you.
Thanks all. See you in tomorrow's Trade of the Week webinar and the QA on Wednesday and the Trading Studio on Thursday, and then Friday morning for the support session. Thanks, guys. Bye.
Happy trading. Adios.